What's up, YouTube fam? Welcome back to the channel. We got a special episode for you guys today because I'm going to be doing some live trading. So we're going to open up some new positions. Just looking at the positions we have now, we got this put that expires tomorrow, which most likely at this point will be expiring in the money. And I don't see myself rolling it. So that will mean we will have 800 shares of IBIT, which I'm super excited for. And we still have these other puts that are not going to be expiring for a while. So I'm just going to let those rock. And obviously, if they do get assigned, they do get assigned. In terms of our TQQ, we don't have any puts expiring until next week. Same with this TSLL put that also won't be expiring until next week. So not going to touch those for now. I mean, obviously, they're also very deep in the money. And if they get assigned, then they get assigned. I have nothing to do about it, nothing to worry about. Now, in terms of what we have currently open, we have 300 shares of TQQ, 1 leap, and 1 call that at this point is a little underwater. So what we're going to do to try to mitigate that is we're going to sell some covered calls against both the shares, the leap, and we're even going to sell covered call against the call that expires next week. Now, looking at this chart, there's a couple ways to interpret it. Obviously, this is a lower time frame, so it doesn't necessarily tell the story. At the moment, right, what we would want to see is we would want to see some sort of floor built, right? If this can actually hold and then ultimately do, something like this, then we would have, I don't want to say a market bottom because, first of all, I don't like to do my charting on TQQ. I'd rather do it on the real NASDAQ, but obviously it is a very similar pattern in that regard. Now, this, again, is a lower time frame. The 1 hour, in my opinion, is still a low time frame. The 4 hour, the daily, the weekly, that's, in my opinion, the real time frames to be looking at. And just by looking at these time frames, they really don't look bullish at all. The daily, the only way to describe the daily right now, in my opinion, with these candles is like, it would almost be like a rock falling through a cloud. It's like this green candle created a support and we already ran through it. There's just nothing even holding it up. So listen, at the end of the day, the smaller time frames, if they could flip bullish, naturally will leak into the higher time frame, right? It's almost like the small time frame is, like the roof and the walls, and the higher time frame is the foundation, right? So if there's, issues in the roof and the walls, then naturally the leak will get into the foundation of the house. So with that being said, right now the higher time frames are still extremely bearish, and the smaller time frames, I really wouldn't call this bullish or bearish just looking at it, right? It looks as if it's just a range, okay? So, like, what do I mean by range, right? We have a top, we have a bottom, and at this point, it could really do either way, right? It could go like this and break through the range and continue up, or, it can do the exact opposite, right? And that's the thing about the market, right? I talked about this in yesterday's video. If you watched it, if you didn't, go back and watch it. We overcomplicate the market because we're always trying to day trade, but the reality is it's really only going to do 2 things, right? Or I guess 3, right? It could stay in the range, which for option sellers, right, we do not mind this because whether you sell puts or calls, you're going to win. And then it can go out of the range, which if you sell calls, it's like, all right, now your calls aren't going to do great, but at least your shares will. And then if you sell puts, of course, if it goes up, the puts will expire worthless and be profitable. If it goes down, then you'll get assigned. And of course, the most important aspect is making sure that you're comfortable getting assigned. That's why with these IBIT, TQQ, and even TSLL positions, it just is what it is, right? Like, TSLL is obviously extremely volatile. Looking at this chart is just ridiculous. At the end of the day, this chart looks like a meme coin, right? But it is Tesla. It is 2x leveraged of Tesla. So it's not, so bad. So with that being said, what I want to do is I do want to hedge against the potential of this bearish continuation pattern. So I want to sell some covered calls. Now, going into this video, I was considering selling covered calls against everything, which again would be the 300 shares, the leap, and this call. But what I'm going to do is I'm just going to sell covered calls against the 300 shares and the leap for now. So how do we do that? Right, we're going to go and we're going to click on TQQQ. We're going to click trade TQQQ options. We're going to click sell call. And we're going to go 1 week out. And now how do we decide which call to sell? Well, this is where, it does take truthfully, it doesn't really take anything, but this is where I like to look at the chart and try to evaluate. And at this point, I would feel comfortable selling a call up here. Why? Because, it's clearly there's a gap in the market. It's clearly above a resistance, right? In the end of the day, obviously, if we break this high, like this high is the resistance, then assuming we do break it, we would come back down and then continue up. That's what I would interpret what would happen in the market. Now, at that point, by the time it was to get up here, my portfolio would be up a large amount in the sense of like, just if you do the simple math, right? I have 300 shares. I have a leap, right? So these 300 shares, if you're talking $7, right? Because if we get from 58 to 65, that's 2,100, right? That we would be recovering off of this, total return. Ultimately, right? It's a far enough away strike where I feel very confident in the sense of, one, it'll either expire below it, or two, if it doesn't expire below it, then we're going to get the ability to at least roll it higher, right? So, when it comes to selling puts and selling covered calls, I think a lot of people like to go in the money because they want to maximize premium. You can call them premium junkies or whatever you want to call them. But I think it's mostly important is, picking strikes that you're very comfortable with. Getting assigned, first of all, right? Like, not to say I'm comfortable getting assigned at 65, but I'm comfortable at the fact that if the market was able to climb up to 65, I could roll a month or two out to 71, 72, and just keep it going from there. At that point, I'm a lot happier being, having my shares at those prices than down here. With where they're at down here, it's a very challenging part. It's a very challenging place for the market to be for, an option seller, right? And the reason being is like, I know a lot of people when they sell covered calls, they like to wait for some green, which is kind of what I almost want to do, right? I almost want to wait for it to get up here because then naturally I can go even further, right? I can go, when you think about it, right? When you look at the option chain and you click sell call, if I was to wait for the market to get up to 65, then instead of it being $1 at 65, it would be $1 at 70, right? Or 72. So, I understand the argument for both. So people do this for puts and calls, right? They sell puts on red days and they sell calls on green days. And while I do understand that, and I do think that that's a smart way to go about it, to me, the whole point of selling options is to just maximize time, right? Because at the end of the day, as long as you're selling out of the money, you're in a position to win, right? And as long as you're buying in the money, not to say you're in a position to win, but it's just better, right? Like in this case, the option chain is giving the 65 strike an 82% chance of profit. And in the end of the day, that means that they're saying there's an 82% chance that by next Friday, it will be below 66.06. Now, with that being said, the beautiful part, again, of covered calls is that since you're using shares to back it up, you don't even mind if it was to get to 66 because at that point, that you're getting premium and you're getting capital gains. Now, obviously, with all that being said, we don't want to get assigned at 65 because of the fact that our cost basis is 83. So that's another reason why I go so far out of the money. And again, the more I talk, the more it goes up, which is part of why this video is continuing, because I did plan on just opening some covered calls, but it's like, in the end of the day, is if it holds this level, then the pattern most likely will be something like this. And if I'm going to sell a covered call, obviously I'd rather do it up here than, down here. So again, this is a tough predicament, and this is where option selling does require some sort of chart analysis, and this is where there is some sort of trading skills involved. Like at this point, I'm kind of just talking to keep this video going so I don't have to open a position, because I know I said this was going to be a live trading video. But I'm sure if you're a trader, you know that a lot of times the best thing to do is nothing. And in this case, in my opinion, the best thing to do is to wait a little bit. Now, again, it's very tricky because the whole thing of covered calls is hedging against downside movement. So right now I'm waiting because I anticipate a little bit of upside movement. But if it starts falling, then I'm going to wish I did covered calls. So you know what I'm going to do? I'm going to just sell one covered call for now because I have 300 shares, but then I also have two options. So I have up to 5 covered calls that I could sell. So what I'm going to do is I'm going to sell one instead of selling all 5 right now, because you know what? I promised you guys some live trading. And in terms of the level, again, to me, the 65 level is a very safe level at this moment for multiple reasons. Again, being that we're above a high, right? So this is the only chart analysis I do. In the end of the day, if you don't have shares, I believe you should always be selling puts, right? So don't go straight into buying shares and selling covered calls. Always sell puts. And then just do the opposite, right? If you want to sell puts, do them below this low. You know, maybe even go a little further, right? We go on the higher time frame. And I would say, yeah, below, 57, maybe even, if you can go a little lower, 55. But in this case, covered calls, right? We're going to do the exact opposite. We're going to go above this high. So we're going to go with the $65 strike. So I'm just going to sell one right now. And we're going to just submit it. And boom, done. All right, so now I can say, for the sake of the video, we did some live trade. Now, well, the thing I love about covered calls is the moment you open it, you typically get the buying power. Boom, there you go. So now, instead of having 493, I have 593. And that's what makes covered calls so special, right? It is this ability to buy the dip without having to buy the dip. It allows you to free up cash without having to take more money out of your wallet. Because that's the thing. If you're someone like me who, you can call me a market junkie, right? Then you're always your free cash is just always ending up in the market. And that's really what seems to always be the case for me. And that's kind of what led me down this option selling path, was like, the idea of trading was just way too stressful. It didn't really click in my brain. It took me years of trying to realize. And listen, I'm not someone who gives up easily. At the end of the day, if I'm going to trade, which, listen, you can consider, especially these calls that I bought here on TQQQ and IBIT. Where's the other one? Look, of course they're both down, right? You can consider those trades because, they're calls I bought 2 weeks out. But, I just realized the idea of trading naked options, it just became too stressful, right? Like trying to wake up, trying to time the market, all of that. So for me, buying and holding is another thing where it's like, if you're buying and holding the right assets, the juice, the return isn't great. But, if you want to get big returns, you have to buy and hold, risky stocks, risky crypto, so risky investments regardless, right? So that's what led me down the path of selling options, because to me, it just seems like the best of all worlds, because you're able to get pretty good returns, like very solid returns on your money on assets that don't have to be so risky. Obviously, TQQQ is a pretty risky asset in the sense of it's leveraged. IBIT, it's no riskier than Bitcoin in my opinion. It's basically the same thing as Bitcoin, which is why I love IBIT, because it's like being able to sell options against Bitcoin to me. There's been all these ways to create passive income off crypto, but nobody really talks about selling options on crypto. It's a very untalked about thing in the world. People used to talk about DAOs. If you've been around in crypto, then you would know what a DAO is. People used to talk about staking, right? But at the end of the day, in my opinion, you want to get the best passive income returns on crypto. This is it right here. And obviously there's riskier versions. There's BitX, which is kind of like IBIT, but 2x leverage. At this point, I'm choosing to stay away from that type of stuff because I'm already in it on TQQQ and I've already experienced some huge losses. I mean, I'm obviously in it with TSLL already as well. So, I'm staying away from this type of stuff because IBIT to me is enough. But the point is, people want to talk about, income strategies. Nobody really understands that you can really just sell options against IBIT, which is really just incredible. So, you know what we're going to do? We're going to open one more covered call for this video on TQQQ because, again, as much as the market looks like it could go back up, the whole point of covered calls is hedging against the downside. So assuming that this, support breaks through, I want to have these covered calls open. So I'm going to sell them, all right? And you guys are going to see what happens. So I'm going to go, I'm going to go 2 on, what do I have? I have 5 that I could do. So I'm going to go 2 more on this. All right, let's see. Where is it? Sorry. Let's see what we're working with. So we're gonna go. You know what? We're just gonna go the full amount because again, I don't wanna. You're agreeing to sell 400 shares. If you aren't asked to sell by TQ, you'll keep the collateral. This doesn't include regulatory fees. And let's see what happens. And boom, we're in. So now we have covered calls open. We have 500 covered calls open. And the reason why we're able to do this is because we have this call that we bought, this leap that we bought, and 300 shares. So at this point, we are fully in. And as long as it stays below 65 by next Friday, we're good. Now, being that I am a little over leveraged on this position, there is a good chance that I end up just taking the profit, right? And what I mean by that is, if the market makes a big move down, I don't know. Maybe I'll just close it early. Maybe I'll just let it ride because at that point we'll be so much further from the strike. But again, being that, we have some options that, it's relatively riskier in the sense of, this one expires next week. Obviously this, we have years, so I'm not worried about it at all. And obviously these are shares, so there's nothing to worry about. But, for me, again, as much as I wanted to give into that strategy of, wait for it to pump to sell covered calls, I just can't get myself to do that, because then if it dumps, then I'll be in a worse position and wish I sold the covered calls. Where if it does pump, I still feel like it's enough time where, we could still expire worthless. And if it doesn't expire worthless, then I do still feel like rolling is a very optimal option that will be just fine. So I really feel pretty good about this covered call. It's one of those things where I almost want the market to prove me wrong. Let the market shoot up, let the market prove me wrong. That's it, right? That's the moral of the story. When you trade the regular way, right, the traditional way of trading that everyone teaches, you lose, right? When you do it my way, when you lose, you still win. And that's the beauty of it. So I hope you guys enjoyed this video. That's it for today's live trading session. Right now, there's nothing left to do. Let these positions play out. I got a lot of things to do. Actually, I'm moving across the country in 2 days, so I'm very, very busy right now. So I hope you guys enjoyed this video. I hope you learned a lot. Make sure to like, make sure to comment, make sure to subscribe. If you want to learn the exact strategy I use to sell options and how I'm able to basically wheel these positions, obviously now you guys see I got some more buying power freed up. There's really nothing better. There's nothing like it in the world. There's nothing like selling options. I genuinely, truly believe it. Putting yourself in a position to basically always win. Listen, you kind of always lose too, right? But the losses are a lot more manageable, and assuming the market does recover, it will set up very pretty for this account, I can guarantee. And if the market does keep dumping, then we'll just keep collecting cash against our shares. And then when the market does recover, regardless, it's going to look better. And that's the moral of the story. I say it every day. I sound like a broken record. When you sell options, the number one aspect is the asset in which you are selling options against. And now look, we see the market falling. It actually makes us, it's in a lot of ways, it's a bittersweet feeling, right? Like these covered calls that we just sold are already up $50, $60. I could hypothetically close it right now. I'm not going to, because again, now the further we get from the strike, the more comfortable it is for me, because I, just don't have to worry about it expiring in the money. And then again, if it did expire in the money, I'd be very happy, because then my shares are up. So selling options is always going to be this bittersweet battle of, wanting your covered calls to do well versus wanting your shares to do well. And as long as you have the right time horizon, the beautiful part is that you will put yourself in a position to just win in all ways. And that's really all you could ask for, right? Win in all ways. And the only way you can do that is by expanding time. Selling options, to me, I like to look at selling options almost like a parlay. If you follow sports betting, a parlay is when you mix bets in. The only difference is that if you lose, right, you could just expand the time and just keep expanding until you win. And that's why selling options is something that works so well. And look, as this market is just taking another, poop, now we're happy. And again, it just proves my point in real time, right? Real market analysis, why we don't wait for green days to sell covered calls, or why we don't wait for red days to sell puts, because that's not what selling options is about. Selling options is not about being a master scalper or timing the market. It's about time in the market. If I would have waited for it to come up here to sell covered call, then I'd be missing out on all of this. We're already up $90. We have a full week left, and we're already up 20%. It's like, not to forget that, when you sell options, theta is your friend, right? It's not your enemy. So every day that it's below 65, we're going to be gaining tons of value. And ultimately, if it keeps moving down, we're going to be continuously gaining. So just keep that in mind, right? If you're someone who goes into that idea like, I'll sell puts on red days or calls on green days, you're doing yourself a disservice, in my personal opinion, because that is not what selling options is about. Selling options is about the more time you spend in the market, the more likely you'll win, because either your covered calls are going to print or the shares are going to print, and then you can roll the covered calls out more and more until eventually you win in all ways. So again, if you want to get started selling options, check out the link I put in the description for my free guide. And I hope you guys enjoyed this video. I will see you in the next one.